Welcome back to the Daily Drop. We're here with Bud White. We're a real high-level convo. We're talking about corporations, oligopolies, all the things in the space. And look, if we're being honest, a few oligopolies have emerged in Web3. And why does nobody talk about this?
I think everyone's caught up in the hype, right? Most people are trying to jump onto a rocket ship and trying to figure out which one, not really thinking about the impact of what these large conglomerates are doing in the space.
It's a big issue, though, right? Because decentralized ethos is the cornerstone of the entire blockchain space. So the whole point is it's supposed to be without intermediaries. But if you have these oligopolies, if you have a small handful of players dominating everything, isn't that go against the spirit of what he's trying to do?
I think so. I think there are examples of good and bad oligopolies, right? So if you look on the FTX side, FTX grew rapidly, faster than any other exchange. They put themselves in a position to help failing projects during the, let's say, trust crisis that we had in crypto over the last 6 months. Sam was able to go in and pick up, I believe it was BlockFi and a few other products, where BlockFi offered a product that people wanted, a yield-generating account. They ended up going almost insolvent, and Sam came in and picked them up. But on the other end, you've got large organizations like Yuga Labs, which are dominating the NFT and metaverse markets. In the course of, I think it's 13 or 15 months between the NFTs they launched, the metaverse, the central raising of capital, they created about $10 billion worth of value, which is unheard of. I think everybody is rooting for them to win, but I'm also very weary that they have the ability to execute, especially with so many eyes on them.
Yeah, look, and I agree completely. And look, I'm not a hater for any particular organization. I just think that if the entire space is set up in a way where really nobody's supposed to be in charge, but you have a few people who are clearly whales in the space, who really dictate the pace, I don't know, it seems problematic to me. But look, speaking of whales in the space, corporations, people with a lot of power, some of the biggest corporations in the world, Alphabet, Microsoft, Amazon, I mean, these are key investors for Web3. Like, do you think this is a conflict of interest?
I think that the investment capital has to come from somewhere. There's been an immense generation of wealth within crypto, but it pales in comparison to what we've seen in tech, right? And the tech equities that are offered on public exchanges. So take a look at what happened in Canada over the last 15, 20 years. When I was in my undergrad, there was one venture capital firm that was investing in tech companies in Canada. So all of us entrepreneurs had to either go down to Silicon Valley to start companies or take our Canadian companies down there to entice some capital, bring it back to Canada, build companies, and the entrepreneurs of that generation have taken their own wealth and started more venture capital in Canada. They've kind of kickstarted this cycle of one generation of entrepreneurs seeding the next generation and so on. Same thing has to happen in crypto. For a new asset class, there are no large investors that are willing to create venture capital funds. So we've had to go elsewhere. Seeing Andreessen Horowitz, for example, be the lead in Yuga Labs Series A, it does worry me. As a tech company owner and operator, when I see, Andreessen Horowitz's Fund 3 come through with the billions on offer in investment, it does entice me. But I would love to see, for example, FTX putting a fund together, right, and taking money from crypto entrepreneurs rather than outside of crypto entrepreneurs.
That segues really nicely to my next question, right? Because it's not like corporations are necessarily bad, but they do change the temperature, right? Like, do you think corporations legitimize or contradict the space?
I think any institution that's trying to get into the asset class legitimizes it. And I say this both large centralized organizations that have venture funding arms, as well as venture capital companies, as well as hedge funds and banks that want to get into the asset class. If there is a demand for the asset, these finite assets that we've created, the price will go up. And as the price goes up, we've seen speculation go up and crash back down, go up, crash back down. But what happens every time the price goes up, the number of active wallets goes up. And to me, that means there's more utility value in the network. So every time we see this sawtooth, there's a continual growth of people who are using or have the ability to use crypto. We talked about that activation energy, that difficulty.
Let's get more into it after the break, and we'll be back with the Daily Drop.